Let's speak to one company now. SeQuent Scientific is on our radar. The company has reported a good set of numbers. The margins are positive this time around versus a loss that the company reported earlier on. However, the stock, as you can see, is seeing some selling pressure. Manish Gupta, the CEO of the company, joins us now to talk about that. Manish, it was a healthy 25% revenue growth that you saw. In fact, this time your losses are much lower than what you saw last time. Just give us a sense of what FY16 is looking like. When do you think the company could turn into the black?
Yeah, Sonia and Lata, I think the recent set of numbers, while we have not turned profitable, gives us enormous confidence or kind of a ratification of our strategy and gives us significant comfort of our operating performance in the years to come. Especially, we do believe that we will be turning around our operations in the current year. Some of those glimpses are already visible in the last quarter that has gone by. I'm very confident of our future as we go around.
Okay. Morning, Manish. Thanks much for joining us. What makes you confident? I mean, a 25% revenue run rate is excellent. Would you continue to maintain that? Would you better it?
So in the short run, I would suggest, or I would, what is in our mind is a kind of a replication of these kind of growth rates, but that acceleration will occur probably in a couple of years' time when our formulation pipeline comes into the play. Okay. And that will take about 2 more years. So in the medium term, I do expect similar growth rates to be maintained.
What is the next growth trigger for the company? I understand that you are diversifying into human API as well. How much business do you think that could bring on board for you, and what could the other growth drivers be?
Yeah, so let me take a step back in terms of what all things that we have done over last 2 years in terms of bringing a sharper strategy for growth in SeQuent. So fundamentally, 2 years back, we had embarked upon creating a global powerhouse in the animal health business with a portfolio of niche human APIs. What we have done in last 12 months is, of course, sharpening our strategy even further. First and foremost, what we did was we sacrificed volumes for value and also expanded our scope from more an emerging market formulation player to include also the regulated markets. Now that clearly reflected in the kind of investments we did in last 12 or 18 months. We took certain very tough decisions of divesting businesses, of closing down operations in certain geographies. We also sold off or monetized our specialty chemicals business. During the year, we also operationalized our new API facility at Bazaar and actually decommissioned our facility at Ambernath. And we also did a very strategic acquisition of Provet in Turkey. And finally, we also expanded capacities in Bangalore, as also undertook a voluntary license deal with Gilead. Now, some of these capacity expansions and the voluntary license deal would be the short-term growth drivers, which are really going to reflect on the human API part of the business.
Okay.
The long-term strategy will be towards the animal health, which will take some time to play out.
Okay, you've raised some capital, about 52 crores from the Mankekar family, and that is always of interest to the markets. Plus, you've got the FIPB not to raise money via QIP as well. So, when will this money come in? What is the equity dilution? And when will you come back to your old ROEs in that case?
Yeah, so we had a couple of rounds of infusions from the promoter family itself during the last 2 years, and the promoters have kind of infused and committed close to 290 crores in the business. As a kind of a ratification of our strategy, Mankekar family invested about 55 crores. They are known as a value investor, and that's why probably they were following in the stock markets. All these money are either already in or will be there within next couple of months. But as part of our significant fundraise, we do have that FIPB approval, and we would be looking to raise some serious capital in next 2 to 3 months' time.
Okay.
Okay, that is that 400 crore QIP.
That's correct. That's correct.
Okay, so what will the equity dilution be because of that?
So as of now, the promoters hold close to 70% of the shareholding of the company. Post this dilution, they will drop down to about 59 to 60%.
Okay. You were telling us that CAPEX and voluntary license deals will help you expand your human API business. Can you just give us an indication of how much money will you put into expanding the human API business? When will your capacity come on stream at the Mangalore facility, and how much time will it basically take to show up into your revenues?
Yeah, so the capital expenditure program at Bangalore has been already completed.
Okay.
And therefore, the revenue of that has already started of 2015. We also commercialized Sofosbuvir, which was licenses that we got through Gilead. So the full year benefit would but part of that benefit is already captured.
Okay, there's some issue there with the video, but we got the main points. Thank you for joining us and giving us details on that. So that's the word coming in from SeQuent Scientific.